Welcome back. Now, business confidence is on the mend. In the fourth quarter, the RMB BER Business Confidence Index rose to 45 index points, up from 38 previously, marking the third consecutive increase for the year. The rise in sentiment was boosted by an improvement in activity and better business conditions during the period. Isaah Mhlanga, Chief Economist at RMB, joins us to explore the index in a greater detail. Thank you so much for your time, Isaah. An uptick to 45 index points. Talk to us about how far we've come on the Business Confidence Index.
Look, there are a couple of things that we can take out of the release that are quite key if we just look at the trends. So at 45, it means just under half of the business respondents are satisfied with prevailing business conditions. But we also have 3 of the subsectors that are now above 50%. That is wholesalers at 60%, retailers at 54%, and you have building contractors at 51%, which is something that is happening after a very long time. But also more than that, we can also see that it's only the 2 sectors, that is manufacturing and new vehicle dealers, that are still below 50%. But manufacturing was still an improvement to 36 from 28. New vehicle dealers was the only one that showed a decline from 27 to 23 points, which is related to the interest rate cycle. We haven't seen as much reductions, and new vehicle dealers are dependent on the level of interest rates. But overall, it's an encouraging improvement in business confidence that we should welcome.
Let's actually go into the 3 subsectors that are above 50 index points. What's fueled that expansionary standing there in those leading subsectors?
If you look at wholesalers, they rose by 9 points to 60. Retailers rose also by 9 points to 54. Most of the drivers are really related to consumer-facing subsectors of these 2, where we have seen a decline in inflation over the past couple of months, but also the beginning of an interest rate cutting cycle. And in addition, the cash withdrawals from the 2-pot system are bringing in optimism within these 2 sectors. And for building contractors, also linked to the interest rate cycle, but the general improvement in the construction sector that is related to infrastructure investments that comes out of the structural reforms that we currently see. So overall, we think the cyclical factors that are related to the consumer are the major drivers. But we also have the structural issues that relate to the ending of load shedding, the general improvement, even though marginally or at the beginning phases in the logistics sector, that has contributed to the positive or an improvement in the business confidence that we are seeing.
Well, I mean, on the other side of the spectrum, you talk about the pressure that we're still seeing there with new vehicle dealers. I know that obviously the interest rate cutting cycle has just started, and there are questions about how aggressive then we can go, going forward. And I'm wondering if maybe here in the fourth quarter of 2024, this could actually be the bottom that we've been looking for in that subsector.
Look, we would expect this to be the bottom that we have been looking for, but also remember that this is also an export-facing sector, which means when the global conditions change and demand from the global environment reduces, it will have an impact on the sector. But just looking at the domestic sector itself, it's really just an interest rate cycle, which would suggest to us that perhaps we have seen a bottoming within this sector. And remember, in the third quarter, we saw an improvement of 10 points to 27. So this is just a marginal retracement from the improvement that we saw in the third quarter. So if we just take a longer-term trend, we should expect a continued improvement in the confidence of new vehicle dealers going forward, given that our expectations from an interest rate perspective is another 100 basis point cumulative reductions in interest rates, with tomorrow's decision likely to deliver a 25 basis point cut.
Isaah, you talk about the just under half of the respondents being satisfied. Does that also point to the fact that the majority of the respondents are unsatisfied with business conditions?
Indeed, as it stands, yes, over 50% of the respondents remain unsatisfied with prevailing business conditions. And some of the reasons that have been raised include, logistics, which remain a burdening cost for many of the export-facing sectors, but it also includes the state of our roads, ports, water issues, particularly in the Gauteng regions, safety and security, which continues to impose an extra cost of security for many of the businesses. All of those are the reforms that are currently being implemented to rectify some of those issues from Operation Vulindlela. And we have an additional one, which is dealing with the local government issues. That is really where businesses operate. So yes, majority still remain dissatisfied. We are seeing some improvement, but if we collaborate with other data elsewhere, it would say, the improvement in confidence is warranted. International investors are quite positive. We saw post the GNU formation, 10-year bond yields declined by more than 100 basis points. The currency strengthened. And then we also saw this past Friday, S&P changing the outlook on the credit rating on both the local and foreign currency debt to positive from stable. And again, they highlight that the institutional pillar of the rating, considerations have improved, which is what is reflected in this business confidence improvement.
So it would seem then that it won't really take a lot, considering the momentum that we are seeing, that it won't really take a lot to actually get to the BCI getting to at least 50 index points. Would you say that maybe it's just a matter of time before we get there?
Look, the way that is calculated is the average of the 5 subsectors. That gives us the headline business confidence index. And given that we have now 3 that are above 50%, if we continue to see an improvement in these 3 and also a pickup in the other 2, it's quite possible that we will eventually see confidence that goes above 50. But what is really key is a sustained increase in confidence or remaining above 50 for a sustained period of time. That is what we have found historically is correlated with a pickup in fixed investment, growth, and job creation.
All right. Well, thank you so much for your time and really giving us insights on the latest data coming out of the Business Confidence Index. That was Isaah Mhlanga, Chief Economist at RMB.